Gotcha.
There we go.
Okay, perfect. So in this scenario, again, middle of the road rate, they're not taking the max assistance. Now, if they said, okay, well, we can handle that 675 as far as our debt ratio, they still qualify, they're comfortable with that monthly payment, then yeah, you could totally add an extra, let's see, on 490 times 6.5%. So they're looking at 31K, 31,850. In that scenario, they're coming in with only $7,500 to purchase a home.
And Josh, that 7,500 could be a gift.
And that 7,500 could be a gift. Yes, there's no minimum contribution needed. The contribution essentially from the borrower is the assistance program. So that we've had scenarios like that, absolutely, where, you know, we had some first-time buyers that maybe had $2,500 in their account. Their parents kicked in the other $5,000, and we gave this down payment assistance. Or, of course, you guys can negotiate some seller credit where that comes in and they're literally buying the house. You know, if you, in this particular scenario, if you were able to get a $7,500 credit on a $500,000 purchase price, they're coming up with $0 out of pocket. They would actually get their deposit, you know, refunded. So that's one thing. They do need to have some money for the EMD, right? But they would get that refunded back to them. And we've had those scenarios time and time again.
And they can pull this from their 401k account also, right?
Absolutely. You can pull it from 401k, you can cash out stock, as long as there's a paper trail for where those funds are coming from, gifted funds. And gifted funds, guys, can even come from someone considered, you know, typically it's family, right? That's usually where you would get it from, and that's totally fine within the, you know, guidelines, conventional FHA guidelines. But you can even get it from a friend, someone that's considered a very close friend. Let's say it's someone you went to elementary school with, and they're, you know, as long, they don't even ask you to, honestly, to document it. You just have to say, like, yeah, this is just a longtime friend and they're like family, and there might be a letter of explanation that's needed. But yeah, gifted funds, down payment assistance programs, seller credit, we can work things, especially right now, I think in this market, you know, not to
employer bonus. So
what's that?
if you say, for instance, you work for like a small construction company, your employer is all excited about you buying a house, and they say, listen, you know, I want to gift you something. I think the conversation that I've heard is that don't just write me a check. Don't just, hey, here's a personal check from me to you. More like a bonus, it's something like that structure. Can that happen? I've heard people, I haven't had a client do it yet. I've heard it talked about.
No, we had one where it was an employer that totally, I think it was on a file that that I closed with home buyers, where their employer gifted them some funds to help purchase their home, and it was totally fine. So this is one on that email that I mentioned yesterday, where you have an ability to, you know, even in this case, if they got a $5,000 seller credit, you know, they're only coming up with $2,500 to purchase their home. So
hey Josh, do you know any I'm probably, this is a long shot, it's probably really more of a question for us. I'm not thinking about it clearly, but so let's, like I have a good group of buyers that are in this realm, right? However, the homes that they can get into, afford, aren't in the best of areas and may not be in the best of conditions. Do you find that they get down the tracks and go, oh, the house is messed up, or there's something about the home? Does that come up on your area, or you know,
I don't hear too much. I think that's more on your guys' end while you're out shopping and looking at things. Usually when they're in contract, they've already decided that, hey, they want the house and they want to purchase it, you know, and whatever they're going to do. And, you know, this is another great example of scenarios where maybe they do have the funds. Maybe let's say a client has 10 to 15,000 of their own money, right? And we know that that's not enough, you know, in front of someone, and we're working on their loan approval. Right off the bat, I know, okay, you don't have enough to do a standard loan. And the give and take is obviously the interest rate on that. But as far as a standard FHA loan, you can still get into the 4s right now. Obviously, CalHAFA, you're in the 6s. So there's a give and take, right? You know, you got to give something to get something. But let's say someone that has 10 to 15K saved up. You're like, all right, we're ready to buy a home. And that's not enough to do a standard loan. So then we direct them towards, especially if they're a first-time home buyer, towards a down payment assistance program like this. And if we can still work something where we can get them a seller credit or get them some assistance on top of the down payment assistance program, well, then they can use that 10 to 15K if they are buying somewhat of a fixer upper. We sell that as, hey, well, now you'll have some extra cash. You'll have that 10,000 still in your account or 8,000 still in your account to repaint the house or do the flooring or whatever they're looking to do. So just to reiterate, guys, I think we have a great opportunity right now. I think some sellers are a little bit, they're starting to get a little, freaked out that their house is sitting a little bit longer, right? They're wanting offers, they're wanting buyers. We have some leverage to make a lot of loans and a lot of deals work right now with these programs. Interest rates are starting to get better. It's a really, really good time for these folks to not have to deal with a high level of competition on some of these listings. Sellers want offers. We maybe can get a little credit to help these in scenarios like this. Someone that says, hey, I've got $3,000 and I want to buy a house. Well, we potentially could make that work. It was really tough to do that last year or even at the beginning of the year, right? If someone needed seller credit, if they didn't have gift funds and all they had was $5,000 and they wanted to buy a house and they had the credit, they had the income, they just didn't have the down payment, that was a little tougher. Those were tough to get those offers approved, but I'm excited. I think we're in a position now. I want you guys to get out there and sell your butts off and let these folks know that, hey, this is the time. And with all those things that we just went over today, that this is a great time to buy. Don't worry about what the media is saying. Don't worry about, interest rates. You're going to get into this home. You're going to start building your financial future, building a foundation, and you marry the house, you date the rate.
And here's two things that I was thinking about, just because I come from a marketing mentality. When someone tells me I don't have $2,500 to buy a home, what should be your follow-up question to them?
You asking me or the group?
I'm asking the group.
Yeah, let me pop this so I can see everyone.
The good news is you want to buy a home.
Well,
I don't got the money, but I want to buy a home. Okay.
Yeah, everyone always tells me this. I don't have $2,500. Well,
do you have a time?
Who do you know that could gift it to you?
Say that again?
Or retirement? Do you have a 401k? Do you have any stock options?
Yeah. How much do you think it costs to go into a rental?
That's $5,000.
Yeah, it's a lot.
That's 5,000 large right there. You got it. You don't understand what you're doing with it. You just don't know you're doing it.
So the first headline I thought about is buy a home with less money down payment than your security deposit. Does that make you guys think a little differently?
I'm making a side-by-side right now. Here's what it costs to get into a rental today in this area. I'm having it made. Here's what it costs to buy a home. It's funny you brought out that same kind of scenario. You're, $1,500 difference between buying the house versus renting it again.
Now think about if you're in a rental now, will you be getting that money from your landlord for your security deposits? So
unless you keep it super tight.
Yeah, most people get their security deposit back. Most people do. I mean, I cut the check every like 5 or 6 times a week from the rental side. But here's what I'm finding. Let's say, because I'm running across this right now, a seller today wants to sell their rental property and they're kicking out the renters. What are they getting? They're getting the security deposit back plus moving expenses, the equivalent of 1 month's rent. So when you hear people saying, I need a rental now, you know what I'm thinking? What if I could get you into a home based on all that money you're going to get from your landlord?
That's a great point. And then the second thing you say is, let me get you over to Josh Holman at Summit Funding to show you how to make that happen. You know what I mean?
So think for these people, because you know what they're thinking? And think about yourself. When you're in fear mode, can you think? No, these people are dealing with fear. But if I could show you an alternative, they're going, oh, wait, I never even thought of that. You're right. Let me show you how. So how many of you guys are on Tracy Rant and Raves? How many of you guys are on your friends on Facebook? I need a 3-bedroom, 2-bath rental right now. Hey, what if I could show you how to actually buy a home for what you would put as a down payment for your security deposit? Start thinking how you can help people, because that's what they really need. They need a guide. Be that guide for people. And then secondly, Josh, I put the question in there. What marketing material do you have to help us market these programs?
Well, I'm definitely going to post a video so you guys can help share that, but we can pull up some, oh, we got Justin coming in here. We have some, CalHAFA down payment assistant flyers, things like that we can send out to you guys.
Okay.
Yeah.
So send those to us. We want to start marketing this stuff because this will help you guys. Now, keep in mind, not everyone's getting this kind of education. One thing I want you guys to start doing is cleaning up your Facebook list. Put all your agents and lenders into one category. So when you post this stuff, they're not copying it, duplicating it. Josh just said something earlier. Marry the house, date the rate. Look how quickly that thing went all the way around. If you could keep some realtors off your list when you're sharing it to your friends, your sphere of influence, they're not going to be copying your stuff. That's the one biggest challenge we have is we'll do stuff, then everyone copies it eventually. Make it a little bit harder for them. So go into your Facebook accounts and go, okay, this is a lender, this is an agent. And then when you're posting stuff, just put exclude realtors. And that way realtors aren't copying all your stuff. It'll give you guys an advantage in this market. Okay.
And I think we need to operate with a little bit of urgency. I mean, don't get me wrong, I'm all for lower rates and all that good stuff. But I mean, factoring in that potentially getting seller credit is what makes some of these deals work. I'm not sure how long that would last. Who knows how long that we'll have that opportunity to have a little bit of leverage on the buyer's side, right? So that is something that, we should definitely be transparent about with our buyers. Like, hey, look, we're kind of in a interesting little spot right here where the buyers have some leverage and you got some ability to help yourselves out. So let's definitely use that. And anything you guys need as well on the side, if you want to have a one-on-one with me, if you want to just do a quick 20-minute, 15-minute Zoom call, because some of this stuff, you want to dive a little deeper into, I mean, I'm always available for you guys. So I appreciate the opportunity to go over this, and I am excited. I think pricing is getting better, and we have some opportunities to finally help our buyers after a rough 2 years where they were scraping and clawing to try and get their offer accepted.
I will tell you, having been through this market a few times, your first time home buyer right now is going to save you guys. Target that person today. There's a lot of them. What are they lacking? Education. They're looking for a guide. They need a cheerleader. Be that person. I've done this through different standpoints. Here's what one of my oldest teachers told me when I got in the mortgage business. If you can learn FHA, VA, down payment assistance, no matter what market, you will survive. This is the market you have to know that stuff.
If it ends in an A, it's the first time buyer loan. FHA, first time buyer, VA, there's typically first time. If it ends in an A, that's what you want to go talk about.
Yeah. USDA. Start mastering this stuff, because
USDA,
these are the people that are going to get you those little wins all the time. There's a lot of first time home buyers that need help.
One last thing, guys, I want to mention about CalHAFA that was limiting to a degree. The max debt to income ratio was 45%, and it still is. But if your credit score now is over 700, you can go up to 50% on your back end debt ratio. So that will increase your purchase power for those folks that have credit scores over a 700. So they are opening things up a little bit. which is good news.
Okay. Perfect. All right, guys. Great stuff. Thanks a lot, Josh. I know there's a lot of open houses. If you guys have questions, make sure to give a call to Josh.
Cool.
Have a
Thanks,
great
Ron.
day, guys.
All right, guys.
Bye.
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 Gosh.
Bye.